We have a really good topic for you guys today, and it was really well received. So we're going to dive right into the intro as people continue to join. So thanks again for joining us. As you guys know, whoever has joined us on these sessions in the past, we do like to do these in person to give us a bit of an opportunity to socialize face-to-face with one another. In case you guys haven't heard, there was a pandemic that's still going on, which has prevented us from doing that. So we're relegated to this for the time being, but we're hoping that we can pick it up, and have a blend moving forward. Just so you guys are aware, all the attendees' mics and cameras are going to be turned off automatically. We're recording the session as well, so the video is going to be made available to all attendees afterwards. And today we're really lucky to have an enthusiastic crowd and a well-versed panel that have a wealth of knowledge with regards to mitigating some possibly very extensive risks. As you can see, the topic is condo insurance at a breaking point. So we're going to move on to slides. We're just going to introduce most of you guys joining us today have either worked with us or heard of us, but for those of you who haven't, my name is Marko Lindhe. I'm the VP of Sales and Marketing at Minute Solutions. My partner is Maislin, who introduced himself already. He's going to be handling the Q&A at the end of the webinar, and questions can be directed to him during the presentation at the question section at the bottom of your screen there. And for those of you who haven't worked with us before, we're a minute taking company. We work with over 1,000 condos in the GTA and Southwestern Ontario, as well as a bunch internationally all over the US as well. Enough about us. Let's get to the good stuff. Here's the agenda of what we're going to be discussing today. So we're going to introduce both Simon and Brent, and then we're going to pass it off to them for presentations, and then we're going to have a Q&A afterwards. There's going to be some really good stuff to talk about today, but we don't suspect we're going to go past 5 o'clock. If we do, it means we had a really good, strong Q&A, but feel free to exit as you wish. And if there's any questions that come in and trickle in afterwards, feel free to email any one of us, and we'll get back to you guys with those answers and put you in touch with Simon and Brent accordingly. So let's get into our speakers. First up is Simon. So Simon Brunet is the founder and president of Connected Sensors. Simon pursued and graduated with a BCom degree from the University of Ottawa, majoring in finance. Over the past decade, Simon has collaborated and worked in the insurance solution space. As a sister company to Connected Sensors, Integricon is a restoration and construction firm that specializes in both insurance and private work. Through Integricon's emergency restoration book of business, it was identified that water is the greatest cause of loss within the built environment, with 48% of claims caused by water loss. It was this statistic, coupled with Simon's passion for sustainability and strong social consciousness, that led to the inception of Connected Sensors. Over the past year, Simon has meticulously researched and developed a unique, comprehensive solution and driven approach to reducing building risk and managing water. His finance background has given him the tools to create and implement models that deliver a return on investment for all stakeholders, from the insurance company to the property owner and manager. It is Simon's holistic and conscientious approach to providing water management solutions that has inspired Connected Sensors' vision to save money, save your building, and save the planet. So there we have Simon. Here's Brent Looby. Brent has over 15 years of experience in the property restoration and construction industry. After graduating from Fanshawe in 2004 with a diploma in construction engineering management, Brent pursued roles as an HVAC technician and carpenter before assuming the role as project manager for a large construction firm in 2006. Brent is recognized as a subject matter expert and a leader in the industry and has vast experience working on complex and large loss projects. His strong interpersonal and effective communication skills, coupled with his problem-solving mentality, allow him to deliver a high-quality performance that is on time and on budget. Brent joined Integricon in 2016 and works as a senior project manager, primarily for the condo strategic business unit. As senior project manager, Brent's main focus is to deliver a superior performance while providing an enhanced client experience. With both operational and marketing expertise, Brent has proven that his unique blend of skill set and industry knowledge has contributed to his continued success. So now I'm going to pass it over here to Simon to kick it off. There's a dog barking in the background, so I should mute it before it gets carried away here. So if you want to lead it off, here we go.
Simon, also don't forget to unmute.
Here you go. We just present now. And here we are. Marko, thanks for the intro. Simon, President of Connected Sensors. Today we want to speak to you guys about condominium insurance and why we think it's at a breaking point. First, we're going to speak about condo insurance, rising premiums and deductibles, and why you should care. In second term, Brent is going to speak to you guys about why we see the condo business being an outlier amongst the businesses related to the restoration business. And finally, I'll speak to you guys about the risk mitigation and how water management can help you reduce your water risk within your property. So why is insurance rising? Well, first, let's look at the statistics. Each condominium has a 30% chance of making a claim each year, of which, as Marko mentioned, there's about a 48% chance that claim is going to be water related, making that a once in every 7 years that you're going to have a water claim within your condo. So insurance companies have noticed that, and they've increased policies now for 13 consecutive quarters, some of which have seen increase as high as 780% over the course of the year. And how about deductibles? Well, here's what's happening. The average claim is costing anywhere from $100,000 to $250,000. And over the last 10 years, there's been an increase of about 400% in the cost of that claim. So again, going back to underwriters, and what the insurance companies are doing is they're basically diluting their risk. And they're saying, okay, well, these properties got a really high likelihood of having a claim. And so how might we reduce our risk from our perspective? So one of the first initiatives is to increase the deductible. So what was 5 to 10 years ago a deductible anywhere from $5,000 to $25,000 is now $25,000 to $500,000, and many of which are closer to the $500K range. On that note, I'll pass you over to Brent, who can speak about the latest case study.
Yeah, thanks so much, Simon, and thanks for the introduction, Marko. So yeah, I'll be taking you through the next little bit of our presentation. We'll kick it off with a case study, as Simon mentioned. So Integricon was contacted in 2019 to bid on a large restoration project as a result of a water loss. Early 2020, we were awarded the restoration of that project. It turned out to be about $600,000. Now, on the other hand, there was an emergency portion of this loss that we were not involved in, worth between $300,000 and $400,000. So we're looking at an insurance claim of $1 million. Now, the issue with this corporation was about 18 months prior to this, they had suffered a very similar loss. So inside of 24 months, they had $2 million worth of insurable losses. Now, when we were about 80% done the restoration on the project, we were awarded. Unfortunately, they had a third loss. So that one was about $250,000. We ended up looking after that one for them too. And right as we were wrapping up the repair on both of these, the corporation's insurance was up for renewal. Their rates or premiums skyrocketed, and their deductible went from $25K to $250,000. So massive issue. Now, just in saying this, that building is a perfect candidate for a water management system, and that's something that Simon's going to talk to you about a little bit later. So as a result of buildings having that type of issue, we've noticed in our book of business, not a terrible amount, but a definite increase in buildings that are now self-insured. Because of the increase in premiums and deductibles on these high-risk buildings, it just doesn't make financial sense for them to pay for insurance. They'll never see the return on that investment. So they're positioning their maintenance fees in a way that allows their reserve funds to be healthy, and they can self-manage and look after any problems that they would have in a building. Now, why the increase in claims? There's a number of different reasons for that. One is just the volume of buildings. Now, I'm sure if anybody's driving downtown, you see all the claims are going up like cranes. Buildings are going up like hotcakes, right? So one, more buildings is going to be more claims. Weather, as always, it's going to play a factor. Old infrastructure, you know, as buildings age, you're going to get failures. But one of the biggest ones that we're seeing are poor building practices. And we'll speak to you about that a little bit later. Now, why should you care? You know, as Simon alluded to previously, 10, 15 years ago, you would very rarely ever see a deductible in excess of $25,000, right? Your deductibles for condos were, you know, in the 2,500 to 15K range, right? And now we're just seeing astronomical deductibles and premiums. Now, back then, insurance companies assumed a lot of the risk and incurred most of those costs. Now, with the rise in insurance claims, the insurance companies are now trying to put a lot of that risk back to the corporation, which in turn the corporation is going to be trying to put more of that risk back on unit owners. You see this in ways of standard unit bylaws. So, you know, if I'm an end user and I'm going into a building looking to buy a unit, and I know anything about insurance, if I ask for the standard unit bylaw and it says that the corporation is basically just responsible for the concrete walls, nothing else, I might be a bit weary of why that is, and maybe walk down the street and look for a different place to buy. So that's a big issue. Now, Integricon is kind of stands apart from a lot of the restoration companies in our industry. We have 6 strategic business units, and we've identified the condominium area as an outlier just because it is so different from the rest. Now, why isn't it an outlier? Well, condos are built by developers who are not the end users, and they're forced to build these buildings quickly, efficiently, and cost effectively in order to turn a profit, right? And as a result of this speed, workmanship often suffers. So us as an insurance restoration company, first, we see this all the time by the way of builder's risk losses. Now, what is it? What is a builder's risk loss? What does that mean? So builders have to carry insurance for the duration of their build until it's turned over to a corporation, right? So typically, if a builder has, you know, a small water leak or a small fire, you know, they're going to look after it themselves. Their contractors are there, they'll look after it quickly, and their deductibles are generally high. But we're seeing an increase in these claims actually going through because of their size. And that relates to, you know, the poor workmanship issue. We're actually just wrapping up about $1 million worth of builder's risk work in one building that had 2 losses inside of 3 months of each other. So what does this mean? Like, why should you care about this? Well, guess who gets to inherit these problems? Once it's turned over to the corporation. Now your carry-on warranty is going to look after this for a certain period of time, but once that's over, that's on the corporation, and these issues are systemic. So you're going to be left holding the bag for a long time. Now, another reason that condos are an outlier is each corporation, each condo board operates differently. You know, they're made up of individuals. Individuals are by nature different, and they rely heavily on management companies to look after their day-to-day operations. Now, if there's not a harmonious relationship there, that could cause issues because, you know, a management company isn't tied to any financial risk tied to any of their decisions. And with the competitive nature of the management world, that could kind of turn into a high turnover. So condo boards and management, you've management companies need to really ensure that they have a harmonious relationship. Now, an example of that is, let's say you have an emergency and a property manager contacts, you know, a contractor that they've used forever. They've done fantastic work, but the condo board doesn't know them. And for some reason, this is the worst job that they've ever done. You know, everything that could go south did go south. You know, that could cause a fracture in the relationship between the two, and in turn facilitate that turnover. Now, this is the biggest one, the bid process. So in all of our other business units and in other construction business units at large, bid processes are fantastic. The way that they work is generally a pre-qualification package is sent out by an end user. In this case, it'd be a corporation or management company for that matter. And this is sent out to vet that contractor, make sure that they're qualified to do the work, make sure they have all the proper insurance to do the work. And through that process, a specific number of contractors are awarded to be the vendor of record, and they'll remain a vendor of record for an agreed amount of time. Now, when a request for tender or bid comes through, it's only sent out to those vendors of record. You know who you're working with. You know that they're qualified to do the work. And during the submission process, along with the tender package, there's a set date and time for that submission. Let's say it's Friday at noon. If your bid is submitted on Friday at 12:01, you're disqualified. Your bid's thrown in the trash. Now, these bids are delivered under seal, generally opened by a cost certifier with all stakeholders, reviewed without prejudice, and the contractor, who's a vendor of record, is awarded the contract based on having the most competitive price. So that's a perfect world. Now, when we're looking at the condominium world, it is drastically different. So during an emergency service, as always, you know, a manager is going to contact a contractor they know, they trust, has done work for them, as we talked about. You know, once that emergency cleanup of whether it be a fire or a water loss is done, if it's a large project, it's going to go to a bid process. So the problem with this is, in the condo world, it's generally an open bid process. Contractors may not be a vendor of record for the broker of the building, for the corporation itself. Now, your broker and your insurer of the building are going to make sure at least one of their contractors are in there, but you could have a slew of people that are not vendors of record and may not even be qualified to bid on it. Now, when the bid submission process happens, again, bids are due at a specific date and time. However, in most cases, bids are not submitted under seal and not opened by a cost certifier. They're opened by maybe one stakeholder, two representatives maximum. I'm not saying that's all the time, but we see it a lot. And there's a very lax attitude as far as the submission time. Again, if the submission time is Friday at 12, you could be a minute late, an hour late, sometimes a day late, and you still be accepted. So that's a huge differentiator right there. Now, what's the cause and effect of this? As a result of this process, pricing is often shared, price matching is often allowed, and often the most qualified contractor is not awarded the work. Now, why should that matter to you as a corporation a board, or a management company? Well, if somebody's not qualified to do the work, let's say it's an insurance situation, they're going to drag out the process for months or years, in some instances longer than it should. You could end up in litigation as a result of that. And you could end up with the contractor leaning your property, which is worst case scenario. Now, Simon has found this morning actually an interesting article in the Star that actually talks specifically to this issue and collusion involved, and people are being charged as a result of this. So this is a big problem, needs to be fixed. We need to look at doing so. Now, in the condo industry, restoration companies that are specifically in that space spend a lot of time and money marketing to the third party, which is the manager, generally, to secure that emergency. Now, these contractors rely heavily on those management companies or managers to flow the work to them. And there's an underlying cost to that, which the consumer pays. Now, why is that an issue? Well, it's an issue because what we talked about previously. However, everybody's a product of their environment. These contractors have been doing this for years. It's the way of the world to them. So if it ain't broke, don't fix it. You know what I mean? But that's something that we really need to look at. Now, finding the one. Why is having a contractor that's knowledgeable and trustworthy such a big deal? Well, they'll save you money. By implementing that pre-qualification process and vendor selection process, you can find a strategic partner or partners that'll execute on your needs. They're working for your best interests. As a result of that, the relationship is now transferred from a marketing or personal relationship to a strictly professional and competency-driven relationship. You have limited touch points, you know who you're calling, consistency and accountability. And, you know, through that pre-qualification process and vendor selection process, everybody's on the same page. You know your rates, you know who's qualified to do what, there's no gray areas. Now, the role of a condo board, I don't think I need to educate anybody on this call what the role of a condo board is, but this is what it looks like as from the outside looking in. It's to mitigate risk, look at preventative maintenance, manage your fees, be a part of decision-making on repairs and maintenance, managing a reserve fund, and good governance. And if there's not good synergy between the management company and the board, you know, isn't as involved, that becomes an issue in from an outside looking in. So what can we do to control, what can you do to control and mitigate your risk? Get involved. As I was talking about before, be proactive and invest in mitigation solutions. Simon's going to talk to you about that very shortly. Vet your contractors ahead of time. Make sure they're qualified. Go through that vendor selection process. It's in your best interest. For larger jobs, consider hiring a cost consultant and do your due diligence. Get involved. At the end of the day, it's your money. So thank you very much for your time. I'm going to send it back over to Simon to wrap up, and we'll talk to you in a bit.
Thanks, Brett. So let me start by sharing a bit of the story behind connected sensors. In 2018, Integricon noticed a pattern in their business, and it became obvious to them that water was the leading reason why we were getting business in the insurance segment. And so given the engineering background of the partners at Integricon, one of the obvious decision was, okay, well, there must be a better way. We got to solve this for our clients. And that's how the idea for connected sensors was born. And one of the first things we found was that for insurance, water was a new fire. As I mentioned before, on the claims side, there's about a 48% chance that claim is going to be water related 18% chance it's going to be fire related, and a 4% chance it's going to be theft related. Now, when we look at things, we've solved the theft issue. We've found ways to install cameras and have security systems and make sure properties were protected. From a fire standpoint, every new building has a fire suppression system. There's smoke detectors, but nobody's ever looked at water. Nobody's ever solved the water issue. And the higher the tower, the more risk there is around water. And water, the truth is, there's water throughout your building. So why is this a problem? Well, most of the expenses as it relates to water, to claims are water related. And on top of that, as we mentioned before, because policy costs are going up, deductibles are going up, you end up being more responsible than ever for those damages when there's a water event in your property. And ever increasing expenses are problematic for condo boards. With our water management solution, you have the ability to reduce your water risk while also improving your net operating income. So what we've got here is a suite of products built behind a software with a robust wireless network to help deliver a complete solution around water. So whether that's metering your water at the main and identifying potential infrastructure leaks such as toilet leaks and faucet leaks, and simply identifying the areas of opportunity to reduce your water consumption, or detecting leaks and floods within the units or anywhere within the building, we've got you covered. So let's look at a traditional event. In today's world, if, let's call her Mrs. Smith. Mrs. Smith has a leak or a flood event in her unit at 3 a.m. She's likely going to call a concierge at the front desk, who's most likely going to call the property manager, who's probably not on site, who's also going to call the facility manager, who's also not on site. And they're going to scramble to find probably a plumber to figure out a way to come on site as soon as possible to turn off the water. And then they'll have to dispatch an emergency service provider to come and mitigate that flood. Truth is, that tower is 20, 30 story high. By the time that whole circle event happens, might be half an hour, might be an hour, maybe 2 hours. And that flood that was on the 20th or 30th floor now ends up on the 9th floor. And that's how you get to a claim that goes from 150,000 to 250,000 on average. So with our solution, what you have is the ability to detect water, turn off the water automatically, or with the press of a button, and then deal with the problem. What this does is it reduces your risk profile within your property. So the outcome, well, you're reducing risk for tenants, for landlords, for condo boards, for insurance companies. You're reducing your operating expenses, your capital expenditures. You can have actionable insight so that you can determine for your next budget what kind of maintenance you should be scheduling in as it relates to water within your property. For example, riser replacements. It also gives your property management team a better work-life balance. It can help you reduce your ecological footprint by helping you save on water. And it helps increase revenue for those of you who are landlords and renting out units. It's an overall just a better experience for both tenant, landlords, condo owners, and property management team. Now, what are the benefits? Well, it helps with insurability, decreases the likelihood and size of loss, helps make the risk more attractive for underwriters so that next year, when your policy renewal comes around, you're not struggling to get insurance and you're appealing to those underwriters so that that policy can be attractive both for you and for the underwriter. It also helps reduce costly repairs and cleanups, as we mentioned before. Folks, this wraps it up for us, but thank you for this call, and we look forward to the Q&A. Noah, over to you.
Thanks, guys. Some very informative stuff there. We appreciate all that. There's a couple questions that came out. If anybody has questions now, feel free to hit the Q&A button on the bottom of your screen and just type it in there, and I'll try to address as many as possible. There were a few questions that have come in over the last day or two via email that I told some people that we would get addressed, so I'm going to start with those. The first question is for Brent. We've had two situations recently where two brokers were unable to get insurance at all for complexes. One was based on an unsatisfactory RFS, which was being updated. What options do we have if we're refused insurance coverage?
That's a good question. Not being a broker, that's kind of difficult to answer, but to provide a bit of insight, you know, you may even, if your building might be high risk, so you may want to even look at self-insuring if they're not able to provide you with insurance. Now, there's only a few different brokers out there that are looking at insurance, Atrium's being a huge one, CIS, Jones DeLaurier. So if you haven't tried any of those three, I would suggest really giving them a shot. But it must be a really high risk building, which is why they're having issues finding subscribers that'll look at your policies. So, but if you haven't tried those three, try those three. Maybe they'll be able to help you out. That's really as much as I can tell you about that. That's a tricky one. Yeah.
Okay, great. Thanks, Brent. Next question. I believe it's for Simon, but either one of you can take this one. If the condo business is such an outlier, why continue to include it in your book of business?
Brent, this is probably a good one for you, but I can still answer because I kind of play on both sides. Our motto at Integricon is to transform the industry, and we see a obvious area of opportunity to disrupt this marketplace, and that's what we set out to do.
Okay, perfect. Thank you. Next question is from the audience. This one is definitely from Simon. What is the average cost per unit, ballpark or range estimate to install water detection and auto shutoff capabilities? If easy, what is the cost range for a complex?
Right, thank you. So every system is built differently. The way by which you can shut off the water is also very different. There's multiple ways of looking at this. My recommendation is always to set up a one-on-one call to go over the property, the requirements, the size, how the mechanical system is built, and all of which will help determine the costs of the solution. Traditionally, a lot of systems have been built on actuating or shutting off water in the units, which is very cost prohibitive. What we focus on is riser shutdowns, so that in turn you can reduce the cost of the overall architecture of the system while still providing risk management. If I had to put a dollar value to it, because that's typically what is asked for a complex system, so the most robust system that you can find within a property, I would give a range of 600 to 800 per unit, from leak detection to actuation.
Okay, perfect. Another question from Simon. How would a water detection, et cetera, system work? And what is, you already addressed what is the cost, but how does it actually work? If you could give a quick rundown for people
Of
who are
course.
aware of how it actually works.
So effectively, the first thing we do is setting up what you call gateways. Gateways are effectively your Wi-Fi that you have in your home, but instead of just your specific unit, it's for the entire property. So it gives you great coverage in terms of penetration, being able to get that reception anywhere within that building. That's the first thing. The second thing we do is install these wireless devices that are battery operated in high risk areas. So whether that's base building applications, so risers, mechanical areas, and then we do a deep dive into the units. So leak detection within units, high likelihood of risk is often the washer and dryer. If you've got dishwasher, toilets, all these are high risk areas. So that's the second element. And then finally, the third element is how can we shut down the water for your property? So it's always looking at that condo building. How is the mechanical system built? How might we shut down risers based on leak events or flood events? And all of which we architecture over a proposal that we typically pull out data from the architectural and mechanical drawings and then present to you. All of this is also then pushed. So our system is entirely pushed to the cloud. So we have a platform on which you can see all the devices, all the system and how it is architectured, and where you can manage the events. So in the event of a flood, you can shut off the water, and you can also do the same thing remotely from your cell phone.
Simon, do you want to touch a little bit about townhouse complex versus high rise? There's a lot of questions and concerns coming in about the townhouse guys. I think we have a few of them in here.
Yep.
I want to know how you guys work with them, and what the difference is between working with townhomes and the high rise or mid rise guys.
Of course. So townhouse complexes, basically simplest, the best way or most simplest way to explain this is lower the building, the less the risk, as a general rule of thumb. Specific to townhouse condos, a water meter and actuator combo where we get aggregate data from the meter and identify leaks and pipe bursts is the best way to manage townhouse water risk. Whereas on the condo high-rise side, you're better off with risers shutdowns and leak detection in the units. Which you'll have the products are available on the that I'm referring to are available on the slides that I presented earlier.
Yeah, I think a lot of people are asking for the slide decks as well, so maybe we'll attach it with the recording when we send everything out before the end of this week, either tomorrow or the next day. So we'll include that for everybody. The next question, I believe, is for Brent. It's actually a pretty good question. When a condo corporation has a policy that is subscribed to several insurers and there aren't a lot of insurers prepared to write condos, how does a condo corp get competitive alternative quotes, and how does a condo know if the quote that they have is competitive?
Realistically, you're going to have to rely on your broker to shop you around, right? So a good broker will work with a ton of different insurers that will provide quotes. So depending on the size of your building, if you're low, medium, high risk, that determines the amount of subscribers generally that are going to be in on your policy because they share the risk. But as far as getting competitive quotes, shop around, look at the big three, as like I mentioned before, Atrans, CIS, Jones DeLaurier, and make sure that you're getting the best rates you can. That would be my suggestion. Use your broker.
Wonderful. Another question here. What is the best process for a condo board to take control of their contractor situation?
What is the best process for them to take over their contractor situation?
Take control of their contractor situation, yeah.
Implement a pre-qualification and a vendor of record process. So come up with a list of the service providers that you need, or look to general contractors such as ourselves, right? So come up with a pre-qualification package to make sure that your contractors are qualified to do work and uphold the level of standard that you require in your building, and then make a vendor of record list based on general contractors or mechanical, plumbing, etc. That way you know who you're dealing with at all times. You can keep it in a book, you know who to call. Like I said before, you have limited touch points. Everybody knows what the structure is, but as far as doing things fly by night, there's so many Johnnies in a truck now these days, you can get yourself in a lot of trouble. So that's what I would recommend. Vet your contractors, come up with a vendor of record list.
Thanks, Brent. I think this one's for Simon. We're a large townhouse condo. We have a water meter for each block of townhouses. There are an average of 8 townhouses to a block. Is there anything we should be concerned about?
Great question. Concerned about, I would look at the water events and claims over the last few years to see if there is an issue, and how a water management solution can help you reduce your risk in the event that you've been a victim of floods. But concerned about, it's based on your on the risks that your risk profile and the events that you've lived over the last little while. As I mentioned before, the higher the building, the higher the risk, and seems like there is submetering in the townhouse complexes that you're identifying. We would suggest, if anything, is again the shut off and meter combo, which we reference to as the mini water stopper, along with our water meter. That'll give you great water insight, actionable data, leak detection, flood detection, pipe burst detection, all of which can help you reduce your risk.
Okay, great. I got a pretty good question here. Would putting connected sensors products into a high-risk building like the one in your first question, I guess from Marko, make it easier to get coverage due to mitigation of risk?
Yes. I mean, we're not the underwriters, so very it's not a clear answer, or one where we can rubber stamp. But that said, it's been our experience that the putting a risk mitigation strategy and solution in place makes the risk a lot more attractive for underwriters, and even potentially get competitive bids when you go out for renewal for the following year, which in turn helps you get the best policy, the best bang for your buck, and manage that deductible and that policy cost.
Okay, great. We're going to a question. I see you. Oh, sorry, you want to chime in, Brent?
Can I just touch back on that
Sure.
contractor question quickly?
Yeah.
Another good thing is a good way to do it if you don't have a lot of time to put into it is look to your brokers list. So your brokers have vendors of record for contractors that they have already pre-screened and pre-qualified Atrons, Jones Delore, CIS, they all have that. So they've done a lot of the work for you there. So another good way to do that, way to save time would be to look to your brokers and even the insurers for your building. Each subscriber has a preferred vendor list, right? So whether it be RSA, Intact, Aviva, whoever the subscribers are on your insurance policy, they've all also vetted contractors. So you can go that route if you don't want to be hands-on and do it the pre-qual way. Just wanted to add that.
Yeah, thank you for that. We appreciate that. Marko, I'm going to ask you to switch to the last slide just so everybody sees Brent and Simon's contact information. I see the participants list is dwindling, which means people are getting a little bored with the Q&A, I think. So we'll go for one more and then we'll wrap it up. And then we'll send a recording with the PDF or the PowerPoint presentation that Simon and Brent put on. Usually takes us a day or two to download the recording. So just stand by. If you're here right now or if you're not and one of your colleagues was registered, as long as you're registered for this, you'll get the follow-up email from us with the recording. So for the last question, we will.
Noah, just to interrupt quickly, can we get the remaining questions that weren't answered over to Simon and Brent to have a look at after the presentation as well?
Yeah, definitely.
That'd be great. Love to.
Be happy to respond individually for sure.
Yeah. And if I'll get the remaining questions over them. There's not too many, but if we did not address your question here, feel free to shoot either Brent or Simon an email. Their emails are on the screen right now. But for the last question, we'll go to this one. It is, what is the lifespan of the equipment? Who owns them after installation? How about maintenance? Is it required? Thank you. And I'm assuming that's going to Brent, to Simon, sorry.
Yes, thank you. So the lifespan of the equipment is a great question. Actually, I just answered that over a blog. So speaking of the blog, if any of you, a lot of these questions are commonly asked questions that we often receive. So I would invite all of you to look at our We Answer page on our website, where we've got quite a few of these answers clearly articulated for you all. However, to answer the question, the lifespan of the product is basically we built the product to last the test of times, and we don't see the product ever coming to obsolescence. And if there is anything required, it's going to be batteries, of which our water sensors have a battery lifespan of 10 to 15 years. And the other question that was mentioned by Justino's, who owns the solution? What happens once post-install? So the way we've put our solution together is that we offer water management as a service. So what that means is that you pay a dollar value per month per unit, and it covers warranty, hardware, software, network, all the above, and maintenance, so that all you got to figure out is that one line item and not anything beyond that. We take care of the risk when it comes to the product, any issues with the product, any maintenance, anything of that sort, and we cover it all based on our IoT or water management as a service. And so that gets turned over to you, the condo board, for the ownership after a term of 5 years, where the annual cost gets reduced based on a maintenance and software and monitoring costs only. But I'd love to set up a meeting to discuss some more.
Thank you, Simon. So that wraps it up. I just want to thank Simon and Brent very, very much for taking the time to join us today and for their industry expertise and knowledge. Like I said, expect an email from us in the next day or two with some content from the webinar today. In the meantime, if there's any questions for Brent, for Simon, for myself, or Marco, all the contact information is up on the screen. And as always, we really appreciate you guys joining us, and we look forward to seeing you next time. Thank you.
Thanks, everyone.
Thanks.
Thanks, guys. Take care.